This morning on BRN, how presidential elections affect the stock market. Joining us now is Jane King, live from the NASDAQ. Jane, always great to see you. Thanks for joining us this morning.
Great to be here, Jeffrey.
Last week, or the week prior, recently, I should say, we talked about the history leading up to a presidential election. September, down month. October, kind of questionable. Let's talk about how presidential elections affect the stock market. So, Jane, how do they affect the stock market?
Well, it's interesting because as much as we talk about it and kind of theorize and speculate, it turns out maybe they don't have that much impact on the stock market. So US Bank, got to give them credit. They did all the legwork on this, and they went back for 75 years and looked at this, and they found minimal impact on the stock market. The market was more dependent on other things, inflation, just the overall economy, global events, things like that. The most positive stock market returns came with a Republican in the White House and a Democrat Congress. But again, I think the bottom line here is that, there is some impact, of course, in terms of policy, but we tend to kind of vote in split Washington, and
Yeah.
therefore, not much gets done in terms of at least radical policies one way or the other, and the stock market just kind of chugs along.
Yeah, and to your point, the power of the purse is in Congress. So they can control
Right.
things like taxation, expenditures. In fact, at the time of our interview, our talk, I think there's some negotiations happening with a continuing resolution to keep the government open. So that Jane, is really where I think a lot of the regulation, or excuse me, the legislation comes that really affects the policy and where money is going to be allocated.
Well, and by the time it actually becomes law, it's kind of hammered down and watered down, and all these interests are involved, that it really doesn't have a ton of impact. Of course, we'll keep an eye on taxes and tariffs and what that could do with trade, in particular with China. But I just feel like there's so many inputs into this democratic system, that what we end up with has minimal impact on the stock market.
But Jane, from a media perspective, let's talk about that, because you and I are both in the media. It's good talking. It's good to have clicks, right? I mean, I think you can talk
Oh,
about
yeah.
the presidential election. You can look at some of the policy decisions and figure out what potential impact it is. And so it's really good for the media to talk about these things, but maybe not so much as for the stock market.
It's true. I mean, and we start talking about the election like 4 years ahead of the election. I mean, it's a constant thing that we talk about it, what their policies are doing, and all of the kind of, extraneous, interesting, funny stuff that comes along with it. And so, yeah, I mean, the elections are big business for the media, and you can certainly see that in terms of ad buying on election years.
Yeah, and let's talk about. I want to talk about real Americans. Of course, everyone's a real American, but people, Main Street, people, middle class, all different classes of people. And by the way, I hate that term, but let's talk about what do they pay attention to all this noise related to the stock market? I know they look at the Dow Jones Industrial Average, they look at the S&P 500, but does all this stuff up here kind of funnel its way down the Main Street, or is it just noise?
Yeah, I kind of think a lot of this stuff is noise. They were very impacted by inflation, though.
Oh yeah.
Um, I heard so much about, gas prices and the grocery store, and oh my gosh, it costs so much to feed my kid at McDonald's now, and things like that. Huge impact. I mean, that is like as close as it gets to somebody, like some of the tariffs on China. I mean, but this, that was really, people felt it every day and are still feeling it. So that's, something. And housing. I hear a lot of people now talking about, I can't buy a house. I can't, they just can't come up with the down payment. And, mortgage rates have gone up. So I think housing is still a really big pain point for a lot of Americans.
Last question, because I know you have to run. Let's talk about the Fed in recent weeks lowered interest rates by 50 basis points, big significant cut. We had talked about
Yeah.
that with you. Let's talk about when the next meeting is, Jane, because I guess people will be looking to that meeting to see if there's going to be another cut or they're just going to maintain the status quo. So what's on the docket there, and when does that align with the November 5th election?
Well, so Jerome Powell did talk about or hinted. I mean, how many times did he use the word recalibrating in his speech the other day? It was like 9 times. So he's clearly signaling that they're pivoting and changing course, which Wall Street took to mean is more interest rate cuts to come this year. So it may not be
Hmm.
the 50 basis point. I think that how that was seen was playing catch up because we did have in July they didn't do anything and some people thought we were falling behind some other central banks. So they're kind of playing some catch up there with the September meeting. But I think, provided no big surprises, we do expect maybe a quarter percent the next time. We'll see. But that was what I predicted this time and I was wrong.
Yeah, I know, but we're going to give you, we're not in the prediction business. We're in the analysis business. And credit to US Bank, as Jane said. Great work on this, folks, and we have a good relationship with them. Jane, we're going to have to leave it there. Enjoy the rest of your week. Have a great morning, and we'll talk to you again very soon.
Thanks.
And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place. Details at our website. Until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.